Well, let's get in Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you win. Any view on Zensar or Technologies? I mean, what's the view? You heard what the management had to say. Any view on it and what do you like from the tech space?
We don't have Zensar in our portfolio, so I would not like to comment on it. We have Infosys, Tech Mahindra, Coforge, and of course we liked Emphasis result also. Although market was not happy with the result, but we were happy with the Emphasis deal wins and the commentary and the presence in BFSI. So I would say that, and we are still underweight in IT, by the way, because we also fear that this deflationary trend because of AI, that is a one risk which has come for the first time. Of course, the discretionary spending in US will come back from next year. That is our view. And the valuations of Infosys, Techem, HCL Tech, for that matter, Emphasis are very, very compelling. Especially the large cap for the Infosys, TCS, and HCL Tech and Techem are offering 4.5% dividend yield, 5.5% free cash flow yield. So we definitely want to buy, but we want to buy gradually because we know that we are swimming against the tide in IT.
What do you make of the telecom space right now? Because if you look at the three players there, Bharti on the one hand, good numbers coming in better than expected. Vodafone perhaps an extended lease of life because of what came by from the Supreme Court yesterday, and Indus Towers benefits if its clients benefit, but additionally you have Bharti's board saying that they will buy an additional 5% as well. So which according to you is the best placed, and what's your view on the sector or at large?
So as of now, we have Indus Tower in our portfolio, significantly large weight, and we remain very, very optimistic. Market cap is just 1,03,000 crore, and they generate 15,000 crore cash profit every year. So I would say that it's an annuity-based, cash flow-based business because it is tower and it is a long-term agreement. And plus this added, I would say, comfort that Bharti, in spite of having 50% stake, wants to buy another 5% stake. They have taken an enabling resolution yesterday. So that only provides more, I would say, conviction to our idea. So we remain very, very positive on Indus Tower. And of course, whatever is happening in Vodafone Idea, my take is that this personal view, and I don't own Vodafone Idea in my portfolio, so I own Indus Tower. My personal take is that the broader intent is to resolve the issue.
Yeah.
And that is also good for Indus Tower. Of course, Vodafone has been paying Indus Tower on time in last 2 to 3 months also. So there is no cash flow issue as such for Indus Tower. But of course, strengthening of Vodafone balance sheet will be positive for Indus Tower also.
Yeah. No, absolutely. When you said that it only increases our conviction on idea, on our idea, I thought you took our idea, but the idea is Indus Tower for you. Parag, good morning. Good to have you with us here. Resource companies have been doing very well. I think you like metals as a space. You've spoken about Tata Steel, Hindalco, etc. The other part is oil and gas companies, especially the oil marketing companies. It's been about a month and maybe 5-6 days since the oil minister was here in Mumbai, met investors and argued for higher valuations for PSU oil and gas companies. Stocks are up 15 to 20%. The downstream refining and marketing companies. Do you own anything and how do you think about it?
So BPCL and IOC are the companies which we own in the portfolio. You are absolutely right, Prashant, that on the day when Mr. Hardeep Puri made that statement, that made us look at this particular segment very closely. And oil was already below $70, which is a good tailwind for these companies. So we bought into them, and although small weights, but BPCL and IOC are the stocks which we own. And of course, the results were absolutely heartening to see. Fantastic Singapore, fantastic GRMs. In HPCL's case, which we don't own, but HPCL, the marketing margin was also very good. I would say that, in this companies, why we have taken smaller weights is that we are not sure where the incremental capex which they are doing. What is the kind of return or ROE we can expect out of that? Otherwise, these companies are clean value buys in our view. On metal side, Prashant, you asked us. So we had Tata Steel, Hindalco and JSW Steel in our portfolios, and we trimmed a bit in the last rally because whatever I am gathering is that because last Fed cut, the 25 bips rate cut which Powell did was a hawkish rate cut. And so after that, we have seen that dollar index is moving higher. US 10-year has moved from 4 to 4.1. Dollar index has moved from say 97.5 to 99 and above. So I would say that this is a slight negative news for metals as well as all emerging equity markets also. So I would say that right now we have booked profit at least half of our positions, but we would like to buy on dips, at least the Hindalco kind of name.
Okay, all right. Parag, I wanted your view on the consumption space. Titan came out with its set of numbers. Kansai Nerolac as well came out with its set of numbers. We know the big entrant out there, the Birla Group, making their presence felt, and there's not much growth on Kansai. Your view on both these two names and overall the consumption space, how do you approach it?
So in consumption space, so we have always liked TVS Motors and Mahindra in that space. And we have always remained bullish on them. Of course, the recent rally was just too high, so we booked some profits. But Mahindra on dips looks okay. Even Maruti, for example, yesterday there was a profit booking in Maruti, and we had booked much earlier. But I would like to say that below 15,000 or so, I think Maruti is good. We also hold LG Electronics, recently listed one company in the consumption space. So yeah, I would be optimistic. If you have seen, 3M Corporation reported yesterday numbers. The numbers are absolutely phenomenal in my view. For a multinational company to report a 43% EBITDA growth. So I would say that consumption is you can play through various things, and I would say that definitely it's a good space to be in, because after government and RBI has done so many things, right? Interest rate cuts, GST cuts, and prior to that, income tax slab increase. So the government focus is there, and consumption will drive a virtuous cycle, right? If your more tractors are sold, then Mahindra will put more capacity that creates job, then those people will consume. So it's a virtuous cycle which government has triggered.
Take that point. Thanks a lot, Parag.
Parag, let's take it one by one and maybe like a rapid fire. Walk Hard, I don't know if you have any views, was up 9% yesterday. There is that the new chemical entity, which is supposed to be a blockbuster one for them. The timeline for when the approval is supposed to land is now. Could be any time. We've not heard anything new, but any thoughts here?
No, so I don't track Walk Hard, and so I would refrain from commenting anything on it, and we don't have it in our portfolios. One thing, Prashant, is that one thing I would like to highlight is that banking results have been absolutely phenomenal. Yesterday, we saw City Union Bank reporting margin expansion QOQ and 18% loan book growth with absolutely pristine asset quality. So we have been very big believers of these regional banks. We hold City Union, DCB, and Federal. And we were absolutely delighted with the numbers of all three banks. Federal Bank QOQ NIM expansion was 15 bips. And I think from Q3, Federal Bank will start showing growth and improving ROA trajectory also. Of course, the rate cut of December has to be seen. If that is not happening, then all these banks will continue to deliver absolutely fantastic numbers. Yeah. Even SBI, on PSU side, we hold SBI and Canara. And SBI is going to report results today. My expectation is that the NIMs should not contract by more than 5 bips QOQ, as we have seen in other PSU banks like BOB and Canara and all. In Canara, for example, the loan book growth guidance was 11%. They delivered 13%.
Right.
I think PSU bank trade is still on. There's no looking back.
Yeah, I was up yesterday, was up 5% last week, the PSU Bank Index as well. Parag, I just want to ask you if you have a view on Ixigo, which is the travel, the OTA. It's fallen $100 from the highs, by the way, Ixigo. I don't know if you have looked at this one. And the other one is a dredging corp, which was Circuit Up. It's kind of like a play on this shipbuilding push by the government. Small company, 2,000 plus crore market cap. So Ixigo and this one.
So Ixigo, I would refrain from commenting. We don't have it in our portfolios. But dredging, of course, that also we don't own as of now. But it's a stock worth looking at, because the size of opportunity can be humongous, and the company has all the capabilities. And as you rightly said, market cap is too small. So it can be definitely it can be worth looking at.
Right. Just before we let you go, Parag, I wanted your thoughts on something like an IEX, because they gave us their October update. There has been an increase in volumes, but the sort of that, market decoupling
Correct.
still stays on them. How do you look at a stock like that, which has already seen a bit of a correction, but things are looking good, at least on the operational front? Do you dabble with it or maybe stay away given the sort of uncertainty around regulations?
Yeah, so decoupling is a very big event, but I would say that, yeah, you are completely right that the operational numbers are good. Stock has corrected a bit. So I would like to definitely study more and build a view and form a high conviction contra buy over here.
Okay. All right, Parag, we'll let you go with that. Thanks a lot for joining in. Have a good day. Catch up soon.